Well, everyone, welcome back to the new lesson. In this lesson, I'm going to teach you how to enter. Now, you learn all the basic concepts here. Now, we're going to put them all together, and I'm going to teach you how you can pretty much enter, and pretty much I'm going to do some trade breakdown on how you can approach the market, right? So, let's get it started. I'm going to put myself here, right here. Okay. So, the first important thing is it's better to wait, pay attention about the time to Asia session get finished. Now, basically, also I'm going to show you how the market structure is affected. The ranges affected the market structure, right? So what we can see, we are in the bearish market structure, and the thing is happen is even in the high time frame. If you go to the high time frame, you're going to see we on the bearish market structure. Now, Asia session finished for me. I can confirm my range, so I have a stop hunt here. I have a stop hunt, and I have a break of market structure. Stop hunt to the upside and break of market structure to downside. So I have my bearish QM form. Now, do I have a bearish QM form? Do I have a bullish QM to get form? Not yet. So I'm going to wait. And as I can see, I have a stop hunt and a break of market structure right here to form my bullish QM to confirm my range. So this is going to be my bearish trading range, right? This is going to be my bearish trading range that gets formed. Now, just remember the cycle, okay? The cycle is one of the important things. First, we are expecting to internal liquidity get taken out. So what I can see a lot of swing highs here, but these swing highs are high probable to get taken out because these are making a trend line liquidity, and also we have one swing high here, which is Asia high liquidity is one of the important. So I'm going to stick to this high probable swing high to get swept, right? Yes, I have a swing highs here, but these are make more sense. These are have high possibility to get taken out, right? Now, once I choose my internal liquidity, just follow the range cycle, okay? We are looking to buy at the premium area, right? So are we going to go and look for the high time frame POI above my internal liquidity because I'm expecting that this area get taken out, right? So the nearest POI I can see is this beautiful order block here, okay? Now, if I come back to the low time frame, pretty much, yeah, sure, you can refine this area. Now I'm going to talk about the entry. You can refine the low time frame by dropping down to the step to low time frame. You're going to see you have an imbalance field here. You're going to come down to also you can see you have an open area order block. But the more you refine, the more chance you have to lose the trade. So I'm going to stick to this imbalance fill that I have. As you can see, the 100% didn't get full, didn't get pretty much fill. So now I'm going to wait to price take out my internal liquidity to follow the range cycle, right? So price, as you can see, take out my internal liquidity, tapped to my refined area. So in this case, you can enter direct entry on these areas, or you can wait for confirmation entry, right? So it's completely dependent on trading style. In the VIP Discord, our approach is different based on the trading style that you have. We have some quiz that we're going to identify your trading style. Are you a scalper? Are you a swing trader? Are you intraday trader? And for each, you have a different approach. Not the approach, the whole, talking about just entry approach. But in this case, let's say if you want to have intraday trading. So if you want to go scalping for sure, with the elements that you're going to learn in the VIP trading, you can go scalp here onto this area, but there's nothing else here. So yes, now for the stop loss, the best you can do is put the stop loss above the strong high, okay? You can put this stop loss if you want to save a stop loss, or if you want to risky, if you want a high risk to reward, you can put it above the high time frame POI or above the refined area. It's completely dependent on you. But the more you're going to just cut out the stop loss, the more chance you have to get taken out. So it's better to just identify the liquidity point if the liquidity point is strong. So in this situation, because this liquidity point is strong, I know the chance that price can go up and take this liquidity is going to be lower. So what I can do, I can just stick to this one. So these are the things that you should practice and you can understand. But again, in the VIP Discord, we have a mechanical rule for this. Now, we can enter here. We can, because the price taken out the, let's say, internal liquidity. Now, what we can see here, price tap to the high time frame POI, and we can expect to price reverse to the external liquidity. So now we can expect the internal liquidity get taken out. We are in the premium area, price tap to the high time frame POI. Now we can expect go for the external range liquidity. So now I'm going to play the market. As you can see, price strictly go to the external liquidity, and pretty much a new day start. This is the Asia session, right? So why price didn't go up and injure a lot more liquidity? Because the strong point of the liquidity here that get taken out. So that reason I took this entry. But if I saw, yes, the liquidity wasn't so strong enough, I could go with the safe entry here. So now let's keep continue. Again, what I can see, I'm still in a bearish market structure. I'm going to wait for the Asia session to finish. Now, what I can see, again, I have stop hunt here, right? And a break of market structure right here, which is this kind of for my strong, I mean the bearish QM, strong high. But do I have any bearish QM to confirm it? Not yet. So I'm just going to wait more. As I can see, I have a stop hunt and a bullish QM form right here. So now my bearish trading range confirmed. So now, again, we get back to the most important thing to identify the trading range cycle. We have the range, what we are expecting to price first sweep up internal liquidity. Again, as you can see, there's a lot of internal liquidity here, but we're just going to talk about the high probability one. So the high probability one here is the swing high, the buy sell liquidity, which is matched with the Asia high. So this is the high probability one, can get taken out, but it's not much strong enough as this one. Maybe price can push it above more, come down before tap to the high time frame POI, and engineer more liquidity, which is this is one of the range trap that you're going to learn in the VIP. So, but yeah, but this is the thing I'm going to go with. Now, what are we going to go do? We're going to stick to the premium area, right? So we're going to look for sell at the premium area. So what I do, if I go to the high time frame, I can see what I have here. It's basically I have this let's say, we can say the imbalance fill, but also I have, let me check, I have some support break resistant area here. Also, I have some unmitigated wick here, which you can choose the full area. Now, if I drop down, if I want to refine this, easily I have this imbalance fill, so I can go with it as my refinement. So again, what are we going to do to range cycle to get complete, right? Okay, so we're going to wait. In general, you could get taken out. See, price tap to the refine area. Basically, we can enter here. Now, as I told you, because the liquidity wasn't strong enough, maybe price can engineer more liquidity like this, as you can see, and take those area up. So the best option and choice for me here to just put the stop loss above this or give it a little bit of space, or we can go with this strong high if you want to have more win rate and more safe one. So which in this case, my goal is to show you a different possible scenarios here. So as you can see, prices start to drop, okay? And maybe price engineering more liquidity. So that's reason, because the liquidity isn't strong enough, it's better to us to go with this one. But again, if you want to take a risk, you can go with this one. It's completely dependent on you. My goal is here to show you guys which one is make more sense. So I'm going to play the market here. See, again, price, because this liquidity wasn't strong enough and a new day start, so price just basically is playing on these areas. So now, internal liquidity get taken out, price tap to the premium area, tap to the high time frame POI, we are expecting the external liquidity get taken out, right? And as you can see, price take out the external liquidity in the next day, right? So now let's get back to a new day. Again, I'm going to wait for the Asia session finished. Okay, so I'm at a bearish market structure, strong stop hunt break of market structure. I have my basically the bearish QM, which is going to form the strong high. And do I have any bearish QM? No, I don't. So I'm just going to wait. Oh, that was fast. Okay, so once the bullish QM formed, as I can see, price just go up and strictly take out the, let's say, the strong high. So pretty much in this case, we don't have any entry because we was waiting for our bullish QM to get formed and price take it out. So, and as we can see here, take a look, the ranges are connected to the market structure, right? We was on the bearish market structure, price shift and trend from here, Okay, take out the strong high. Now we are in the bullish market structure. Now I'm just gonna play the market right now to take a look again because we are now in the bullish market structure. Take a look how price gonna react, right? Take a look here. Price again. We have a stop on break of market structure. The weak high wasn't so good enough. We don't have any internal liquidity here. Price again swept this area. So it's dependent on the high time frame break of market structure you're gonna get here. If the break of market structure, as I told you, is with the body close, it's a good one. It's with the weak close, which in this case it's with the weak close in the high time frame. If I go to the 4 hour time frame, you're gonna see it's with the weak close. So that's mean that the reversal can be happen here. So you can stick to the bullish market structure in this case. And let me just drop down to the 1 hour time frame. So what we can see, let me just play the market. That was too fast. My bad. So yeah, a new day start. What are we going to look for? Because we are in the bullish market structure, we are looking for a bullish trading range, right? So what we can see a stop hunt formed right here. Or also we can take this as stop hunt here just to make more sense. Stop hunt to downside, break of market structure to upside. And we have a bearish green formation here. Take a look at stop hunt, break of market structure. Everything makes sense. Our trading range formed right now, strong low and a weak high. Now we're gonna follow the range cycle, right? This is a bearish trading range. We're on the bullish market structure. We want to buy in a discount area, right? So this is gonna be our internal liquidity. Okay, now if I went to the high time frame, the nearest POI below this area for me. So let me see what I have. I have this beautiful order block right here, which also you can refine it in the low time frame, as I told you, but the imbalance match with the imbalance here, there's nothing wrong with it. So I'm just going to take this one. And what we can see, yeah, as you can see, price engineered more liquidity here and take it out, which this is one of the range traps type you're going to learn in the VIP. So price take it out. So again, you can enter here, put the stop loss below the strong low or below this. It's dependent completely on your trading style. But here's the range cycle is so important, right? So now internal liquidity get taken out, price in the discount area, we can, and the top of the high time frame POI, we can go with the external point, which the target is going to be right here. And yeah, as you can see, you are done for the day, right? You are done for the day. You can easily understand the market structure, the basic market structure that I told you, and follow that market structure to identify your range, and you can have the beautiful entry on those. And basically, the most important thing is just follow the liquidity, right? So here, it's going to be like this. Is focus on a high time frame, focus on the market structure in daily and the 4 hour time frame, right? These are going to be the time frame going to show you the liquidity, show you the break of market structure, going to show you the fake breakouts. Take a look to the daily time frame. A lot of traders went by here. The reason was this fake break of market structure, but for us, we know this is a sign of the reversal. Again, we have a sign of reversal here that in the 4 hour time frame pretty much get confirmed. Opposite shift in trend that we can understand we are in the bullish market structure, and you can easily identify your daily range and go with this one. This is a so much powerful concept. These were the concept that I personally use, and me and my student, as you can see in the win section, they are profitable, they are passing the prof frame, they are getting payout, they are making money every day. But again, in the VIP, once you join a VIP, everything going to be much more clear for you because we dive into the advance of each of this, and it's going to be rule based. You're going to have a trading plan using this concept as a rule base. You can go with the scalp trading, you can go with the swing trading, you can go with the intraday trading, which is going to help you a lot. So now in the next lesson, I'm going to talk about the psychology, the risk management, and also you're going to have a channel as a trade breakdown that every week or every day I will going to do a trade breakdown for you using this concept, teaching you this stuff, and you can easily understand. And I hope you enjoyed it. Don't forget to take a note, backtest a lot, and yep, see you in the next lesson.